All right, traders, welcome to the live stream today, which is for the 7th of November 2024. I'm going to share this link so that our members in our community can join us for this live market analysis. Okay. Grab your seats. Let's talk about the market today. I will also show you the asset I have on my list. Let's go through the market and I will share what we have right here. Okay. Right. All right. Thank you, everyone, each one of you. Thank you for joining this live stream. So Bitcoin is currently still trading at the resistance of the 74.75. We are yet to break out of this level. All right, the crypto market, I have my watch list. I have my watch list. All right. Let's go through the Forex, British pound sterling. Let's go through my own personal chart. We open the chart. Right. Okay. We have the DXY, our guiding light. We are still approaching the demand supply above. Gradually we are getting there. GU, the market is still crazy. We can see how the key level zone of the 1.28589 acting as what? As demand, holding up price. Price is failing to break above this level. In fact, let's change this to, I think let's change this color to like something like okay, I think this is good on the price chart. Yeah, the 4-hour chart. These are kind of a crazy market, which as a swing trader or as a day trader I'm not comfortable. I mean, as a swing and position trader, I mean, but day traders can look out for possible entry. So if you are a day trader or swing trader, let's see how you could have taken this trade here. There is a possible pushback of entry on the GU. Please guys, start dropping your comments. Any asset you'd want us to discuss or to analyze in this live stream, what you need to do right now is to suggest such asset in the comment box. suggest such assets in the comment box, right? So that's what you need to do right now. Do that. Now GU, let's go to the chart of the GU from the monthly chart. This is the monthly chart of GU. British pound sterling. This is the monthly chart. Series of resistance. Let's check the 3 months. Resistance. A previous resistance turning into a possible support. All right. That is the monthly chart. Let's check the weekly chart. Wow, seems we're gonna have what we call the tweezers bottom. Are we gonna have this tweezers bottom? We are yet to know this. We are still yet to know if we are going to have a tweezers bottom. The day chart. The day chart. We have rejections on the day chart at the price of the 1.28589. So this level had been important zones. You can see, I love these key levels on this price chart here. First, we have our key level resistance at the price of the 1.28632. We have another key level at the price of the 1.2861. We broke out of this level series of times, and presently we are retesting this level. You can see that. So price is still holding this level. Now what do we have right here? What should we expect as a trader? What should we expect as a trader? There isn't any guarantee right here if the market is going to go up or maybe the market is going to go down. But I can see a potential what? Bullish interest. Yeah. Let's zoom in. Yes, there are bullish interest right here on this price chart. And let's check the fundamental factor before we make our decisions. Let's go to the Forex factory and see what we have right here. Forex factory. Today, 7th of November, Thursday. We have the 1 p.m. Bank of England monetary policy report. Wow. So as a trap on the Forex factory, it's likely we might have what? High impact news. In fact, we have high impact news today between the British pound sterling and the United States dollars. Now, by 2:30 we have the unemployment claims. By 8 p.m. today, Thursday, we have the federal funds rate. Expectation is there should be a reduction in the funds rate from the 5.00 the previous. The forecast right here is 4.7. So it means investors are expecting a potential reduction in the interest rate. The interest rate is the cost of borrowing in an economy. If there's a lower interest rate, this would affect the strength of such currency to depreciate. That is based on fundamental factor. Now read the information right here, which says the actual greater than forecast is good for currency. So if we should see a greater figure than the 4.75 has been forecasted, then there's a higher tendency USD could have what? A strong bullish sentiment. FOMC is coming. FOMC press conference is coming. And remember, the United States election at least conclusion was made yesterday, right? Now this is a very deadly and high impact news. You as a forex trader, you have to be very careful, and you all know whatever concerns the USD, it's always very main. So we have a lot of main high impact news today, so paired against the GBP and the USD. So this makes GBP USD to be prone to high impact news. So it is better you just stay off this market for now. But if you want to trade this asset right here, I can see a potential possible demand zone which could act as what, as a support for price. But the guarantee this level is going to act as a definite support for price is low, based on the high impact news we are expecting in the market. Konya Michael, you are welcome from Ghana. Thank you, Konya Michael. You can make a request of any asset you want us to analyze, right, Konya Michael? So this is what we have right here. Okay, now wipe that out, and let's check on the AUD paired against the USD. AUD paired against the USD, I updated my level. In fact, we should have this level at this zone right here. Should have this level at these zones. Let's have this level at the zones. Let's zoom in. So this is the level we are currently targeting. Now this is a minor level, that is why I use a different rectangular box tool right there. Right, I can see a kind of a strong volatility at this medium, so let's just try to copy and paste. Okay, let's just get this off and then use another tool here. Okay, I think this is good now. This is okay. Right, now this is okay. So this is a minor structure that has been taken out. A minor structure taken out. It's not a minor structure. It did acted as a possible demand here. Later it broke this level, now acting as a supply for price. Not until we can see price closing above this resistance or supply, we should be very careful of looking out for any buy setups in this market. This is what I can see technically. So this is how your price chart, your key level structure should look like in the market. Now I can just remove this right here and use a different, just put it from this level to this zone here, and I'm gonna change the color of this to gray. Change the color to gray so that we can, okay, it's a strong level, right? So this is what I have here. We have a demand at the price of the 0.64683, another demand that was previous demand on the 1st of May 2024. We have a demand again that was on the 1st of August, or during the month of August 2024. And it is possible we might have demand. In fact, we are having demands at these zones. There are series of demands at these zones, right? Just like what we had, right? A demand and demand, right? We move from that demand zones, but currently we are still bouncing in between this supply and the demand zone below. So it means price is traveling through this supply above and demand below. Right now, let's go to the 4-hour chart and see what we have on the 4-hour chart. On the 4-hour chart, you can see this is still a ranging or a sideways. In fact, this is not a sideways market. I'd rather call this market as a choppy market. Market move from this level up, down, up. We cannot exactly know the direction of the trend. Down, up. So we have our supply above, demand below, up, down, up. So based on what we have on this price chart here, we should be looking out for possible entries at either these low swings. If you are looking out for a sideways market opportunity, right? So this is the expectations on this currency right here. But based on the swing concept, I'm not comfortable to take a trade at this medium. I am not comfortable to take a trade because I want the market to open up. open up or maybe come to these liquidity zones here. These are liquidity zones at this level. So if the market can give us a push back into this zone, then we should be looking out for possible liquidity sweep to the upside, right? So based on what we have right here, I am not comfortable to take any or to make any decision. So it's either the price come back to this level or breaks out, give us a retest. I think that will be the better way to approach this asset. So you can let me know the comments, your suggestion through the comment box, right? This market, no, I'm not comfortable to take a trade. Let's zoom out totally. Now, some will say we have the first bottom, the second bottom. It still boils down to what I said. I said for those who want a long right there, you look out to accumulate at the low structure and distribute at the level above, because this zone here is still a supply for price. It is a supply for price. So at this zone here, you shouldn't be looking out for buy for longs. Instead, at the structural lows is where you should look out for long, right? Because if you are looking out for a long, it means you are what? You are longing into a potential supply zone in the market. So you should be looking out for long low or at a lower structure. Okay, that is what I can see on the AUD paired against the USD. Now let's check the New Zealand paired against the USD. We are going to get this off right here. So on the New Zealand paired against the USD, let's go to the weekly chart and see what we have on the weekly chart. On the weekly chart, we are still going through a range band medium. We are traveling through a range band medium. A range band medium whereby price keeps on traveling through a range. You can see that we have our supply all above, or resistance, demand below, demand or support below. So we kept on bouncing through this medium, the way down, up, down, up, down. So that is what we have right here, and I love this chart. It's a kind of a sideways moving market. Now let's move to the day chart. On the day chart, we have a kind of a liquidity at these zones. You can see price bounce back into this liquidity zone. Price bounce back into this liquidity zone. That's why we are seeing some forces of bullish sentiment at this zone right here. Okay, so based on what we have right here, have we seen a technical long entry? The answer is no, but we can see a build-up of bullish sentiment. Let's go to the 4-hour chart. This type of market, you can see that reverse symmetrical chart pattern. Reverse symmetrical chart pattern. So this is just like what we have here. We have our trend line this way. We have it this way. So this was some traders call megaphone pattern. Megaphone. You can see that. So based on what we have on this megaphone pattern, it's likely for price to do what? To fluctuate within these patterns, to keep on extending its moves. Yes, that is what we have. So this is the type of pattern we have right here. I'm not a fan of trading that. Instead, if you like to trade this pattern, I think it's better you wait for price to come to this liquidity zone below, or demand zone. So if the price can push to this level, you start looking out for a long or buy signal to go up. I think that is a better way. Right? Let me know your comments. Let me know your views in the comment box. Okay, so this is what we have on this pattern. Visibility. USD card. USD card is on my list. Let's see if we can see a bearish or a selling pattern this week, because price is at a resistance structure on the based on what we have our resistance above, support below. So let's see what price has to offer at this zone. You can see that. Let's see what price has to offer. Right, let's get it off. I would like to see a weekly bar or a strong daily reversal bar. There are some traders who are actually looking out for aggressive entry. An aggressive entry right here, stop above, all the way low. This is 4:1 ratio. But remember, we have a high impact news today coming up around 8 p.m. West African time. That is the federal funds rate. That's its interest rate. One of the most deadliest fundamental news release. Very, very careful. Okay, so let's just have this here and see what we price has to give us. On the 4-hour chart, this is what we have on the 4-hour chart. Are we gonna have a double top? Top 1, top 2, and this as our neckline. Top 1 and the top 2. We are still yet to know. So which means if you are looking out for a short entry at this zone, we are taking what we call the aggressive short entry. We are taking aggressive short entry. And if you are taking an aggressive short entry right here for a sell, then you got to be very, very careful. You got to be very, very careful. So based on what we have right here, you know, if I were you, I would just wait now to let the news to pass. Right? But if you still insist you want to take a trade, I just want you to check out what we have here. You can see that we have some levels. Highs, break of structure, acted as demand, break, a retest. So we can still sweep back into this level and then back up. Alternatively, we can sweep into this level, a retest, continuation to the downside. So now let's see what we can do on this price chart from the higher time frame. We get this up. No, most of the time we do a lot of waiting in the market. We don't trade, we just monitor to see what the market has to offer. Let's check because in this market the uptrend is here to change. The market structure is here to change. Let's go to the 1-hour chart. On the 1-hour chart, the market structure is here to change. Yes. Now the question is, can we still see something like this? Yeah, for our entry. Is something like that still possible? Yeah, those are part of the things we have to look out for as a trader, those who want to trade the lower time frame. Okay, so there might still be a sweep to the upside before we have it to the downside. The day chart, a daily close of candlestick will give us a better view of what we should expect. Yesterday was a pushback, so let's see if today's day is gonna be an entry bar on the day chart. USD yen, this currency is crazy. USD Swiss, nothing. Copper, I'm monitoring copper for possible entry. Coffee is doing crazy. I just have to get out. It's really annoying. BTC is still struggling at the 75. So currently We are being careful in the market. I am still holding on to my position on Tesla, my long position. And it has gapped up. Nvidia, I'm still holding on to my Nvidia. It has gapped up. DJT, Trump Media and Technology Group Corporation is on my list. So that is all I want to share with you guys today. If you have any question or any suggestion or any assets you want us to analyze, let me know in the comment box. Let me know in the comment box, right? If there's any asset you want us to analyze, please let's go through that together in the comment box. Euro GBP. Some traders are actually in a long position on Euro GBP. Let's check it out. Let's wipe out everything we have on Euro GBP and start afresh. So we go to the monthly chart and we mark our key level structure. That is the first thing. So listen attentively for those of you who are still struggling to mark key level structures. So this is the way I mark mine. I go to the higher time frame. Excuse me, please. I have to pick a call. Hello. Good afternoon. Yes. Good afternoon. All right. Thank you, traders, for waiting. No, I just have to catch up some information. So the first thing I do when I want to mark my key level is first thing you have to do as a trader is to mark your key level. The first thing you do is you ask yourself, what type of trader am I? Am I a swing trader? Am I a position trader? Am I a day trader? Am I a scalper? Now, if you are a position trader, what you do is you start marking your key level from the monthly chart. And if you are a swing trader, you mark your analysis or key level from the weekly chart. And if you are the day trader, you mark yours from the day chart. If you are a scalper, you mark from the 4-hour chart. Now, let's record this so that those who are new can take advantage of this. All right, let's just I want to record this so that people who are new can take advantage of this. All right, And I'll repeat myself again. So as a beginner trader, I do not care any trading strategy you want to apply to trade in the market. You want to trade SMC, ICT, raw price action, liquidity, whatever you want to trade. You want to trade with indicator, whatever you want to trade with. You want to trade Ninja setup, Ferrari, Lamborghini, or Chameleon, Shaolin, whatever you want to trade, Ninja, whatever you want to trade, right? The first thing you have to do is you need to mark your levels, key levels in the market, because these are the universal requirements, the basic requirement of a trader, right? These are levels that shows you the boundaries of market, right? This can also help you to detect or identify or have in-depth idea of structural zones, right? So now, to construct your key level, support, resistance, demand, supply, you need to start from the highest time frame of your trading methodology. Now, what is trading methodology? Now, your trading methodology depends on the type of trader you are. Now, which means, are you a position trader? Are you a swing trader? Are you a day trader? Are you a scalp trader? Right now, if you are a position trader, you start your analysis from where? You start your analysis from the monthly chart, or what? Or the 3-month chart. If you are a position trader, get that. Now, if you are a swing trader, you start your analysis from the monthly chart, or what? Or the weekly chart. That is for swing trader. Now, good. As a day trader, as the name implies, you start your analysis what? From the day chart. That means you mark your support, resistance, supply, demand on the day chart. As a scalper, you mark your key level from the 4-hour chart, right? So get that point, get it. Now, once you make your decisions based on the type of trader you are, then you start your key level from the highest time frame of your trading methodology. Now, I want to mark, or I want to practicalize how a swing trader should mark his or her chart in any type of market he or she wants to trade. Now, let's say for instance you open your price chart. Your price chart should be clean as this, without any indicators. Once you are done marking your key level, then you can now apply your indicators. But before you apply your indicators, or whatever you want to use in the market, or any strategy you want to use, first thing is mark your key level first. That is the first thing. It's just like when you try to build a house, you first dig the foundation. You can't just start building a house without a foundation. First you make the foundation. Now, your support, your resistance, your supply, your demand, these are the foundation of a building. This is the first thing you have to do before you do any or make any trade, or long or short, whatever you want to do. Okay? Right here, I'm not interested in your strategy. Your strategy, I don't care about it. I don't care about your strategy. What I care about right here is your foundation well organized? Is it well digged? Is it well structured? These are the things, first thing that you need to think about. Now, the foundation right here is the support, resistance, demand, and supply. Now, there are 2 tools or 3 tools you can use to mark your support, resistance, demand, supply in trading. We have some tools right here. I have favorited some of these tools, and I have a different tutorial on how to use the trading view. You can as well use any other platform to practicalize this tutorial, right? But personally, I love the trading view based on its flexibility. It offers superior trading tools, yes, and it is easier to implement, right? And there are a lot more features on this platform, right? I have a special video on that. So first thing is, you can either use your rectangular tool to mark your resistance or supply zone, all right? Or you can use your horizontal line to mark your resistance or what? Supply level. Okay? Now, in this tutorial, to make things easy for beginners, let's just use the rectangular tool box. So we use the rectangular tool. Now, what I have above right there is what we call resistance. The level above price is resistance. Take note of that. Now, we have resistance here, resistance here, resistance here, resistance here, based on the rejections of the wicks. You can see that. Now, the next one we have our support is this lows at the bottoms, lows at the bottoms, lows at the bottoms. Now, what we need to do as a trader is to construct this same rectangular tool we constructed right here at the bottom low, because these are the lows where the market found a lot of rejection. So we can copy this and paste this level at this level below as what? As our support. Now I have marked my extremity. Whenever I say extremity, I mean the highest point reached by price at the top, or the lowest points reached by price at the bottom. In economics, the lowest level is the trough and the highest point is the peak. Now, where is the peak in this market? This is the peak. P-E-A-K. Now, this is the peak, right? And then this is the trough. T-R-O-U-G-H. So you need to know that this is our trough. So our trough right here is our support or demand, and our peak is our resistance or supply. So you can call it resistance or supply. You need to know that. Now, once you connect this level, then you now go inside of this your support and the resistance to construct what we call minor structures. Minor structures or internal structures. Another name for minor structures are internal structures. Internal structures, right? Now, these levels above are the major structures. Now, whatever we have inside are the internal. What is inside, right? Now, one of the ways I love to construct my external structure or major structure is using the horizontal line, right, to mark my external structures. You can see that. Now, if I should remove this bar here, this rectangular tool, you can see these red zones or these horizontal lines is my major structures or external structure. So whatever I have inside is my internal structure or what? Minor structure. So we have resistance and support, or we have supply and demand, or we have peak and trough. You can see our price kept bouncing through these levels. Now let's wipe this out and let's go back to the beginning again. Good. Now we have some levels which has been holding price as price keeps on going down. You can see that price kept on going down and price kept respecting this direction to what? To the downside. So this is where our trend line comes in. We use our trend line to take the measurement of our highs and lows on the price swings. You can see that we fire it to the what? To the right hand side. Meanwhile, when connecting your trend line, it's better you connect your trend line from the right hand side back to the left hand side instead of connecting it from the left hand side to the right hand side, right? Now, once we connect our trend line, we can see how this trend line have been acting as resistance for price above. You can see that. Now, in this market here, we know the direction of the momentum is shifting to the downside. The direction of the market is shifting to the downside. Now, it shows us that
market is willing to push all the way further to either break this support or to test this support. Now let's get these drawings out again. Now once we connect our trend line, we now know the direction of the momentum in this market. Now again, this is where your tactics of your chart patterns come into play. Now in this market, we have what we call the descending trend line. In combination with our support, we have what we call the descending triangular formation. And in a descending triangular formation, technically there's a higher possibility for price to break to the downside. Right now, we are not going to talk about that in this tutorial. Let's just see how we mark our key level, because the reason why I'm also showing you key or the trend line is because key levels or supply and demand level can exist in two forms. It's either in a horizontal line or in a dynamic line. You can see that. So whenever we have a rising trend line, it is called what? A bullish dynamic or rising key level. And whenever we have a falling trend line, it is called what? A falling trend line. It is a bearish dynamic structure. Right now, we have price keep testing all the way down, all the way down, all the way down. So the trend line above is a resistance or dynamic resistance, and the trend line below in an upward rally is dynamic support or dynamic demand, and in a downtrend is a dynamic supply levels. So demand and supply, resistance, support, key levels can either be in horizontal format or in dynamic format. All right, whenever a level is above price, it is called what? Resistance. And whenever price is above a level, it is called support. Likewise, in a rising market, price is above the support and the line below is the dynamic support. And in a downward market, price is below the or underneath the supply, so we call it dynamic supply or dynamic resistance. Now we get the point. Now I have marked my key levels from the monthly chart. This is now perfectly okay. Now the next thing I have to do is to move to the weekly chart as a swing trader. Now on the weekly chart right here, you can see what we have on the weekly chart. I have my demand all below. You can see that. Now I zoom in on my price chart, so you can see at this level price is currently trading at a demand zone. Now which means at this level, as a wise trader, you shouldn't be looking to sell, instead looking out for possible short, possible long, sorry. You shouldn't be looking out for short, instead look out for long. Long to where? Long to this dynamic resistance or dynamic supply above. You can see that whenever price comes to the downside, we have a push to the upside and then continuation to the downside. Now a trading signal has been sent in our community on this currency pair, the euro pair against the British pound sterling, and I think this was an aggressive entry. I wasn't the one who sent it, but one of our pros analysts sent out this trading setup. Now we move to the 4-hour chart, the day chart, sorry. Now on the day chart, we can see how price has been respecting this demand or support on the day chart. Now after price rallied to this demand zone, traders started looking out to long, and this is why you can see the bar we have right there is actually giving us a bullish sentiment bar, and some traders in the community, they have currently taken this trade for a long setup. Right, let's go to the 4-hour chart. On the 4-hour chart, you can see what we have on the 4-hour chart. The 4-hour chart now become bigger. It's not, price now become larger. The market has now been expanded. You can see that. You can see. So what traders are trying to do now is they are trying to long from the support of these levels which they got from the higher time frame, the monthly chart, as a swing trader. You can see that. Now let's zoom in on this 4-hour chart. On this 4-hour chart, traders are not just looking for a long, they are looking for a long based on the bullish engulfing bar they got on this support or this demand zone. You can see that. So they are currently in a long position based on this bullish engulfing bar, and their stop will be lower. So this is how the trade on the euro pair against the British pound sterling is being formed. Let's go to the 1-hour chart and see maybe we have other patterns. Now price is trying to give us a double bottom on the 1-hour chart. You can see the neckline. Now if the neckline of this pattern is taken out, there's a higher possibility for more liquidity to turn or to what? To flow into the market. So this is how we run analysis from the higher time frame to the lower time frame. If you enjoyed this tutorial, please give a like, write, comment. You can as well suggest any topic you'd want us to treat in the next tutorial. So this is how you mark your key level from the higher time frame and you relate it to the lower time frame based on your trading methodology, right? For those who are interested in our physical and online trading mentorship program, you can use the link in bio or the link in the description of this video. Our physical class is located at Mokola, number 64, Mokola Road, opposite State Veterinary Hospital, Ibadan, Oyo State, Nigeria. Thank you, traders. So let's see how far euro paired against the British pound sterling can go, right? I will see you in the next one. Peace.